Okay, so good morning, good morning, good morning, everyone. Welcome to the UWI. And I want to say a special welcome to those of us who are joining us at this noble institution for the very first time. Great having you as a participant in ACCT1005. For those of you whom I haven't met before, because I met a couple of you at the course, at the orientation session. Guys, check your microphones. I am Joan Thomas Stone, and it is my absolute pleasure to serve you on this leg of your academic journey as both your course facilitator and your course coordinator. Now, as your facilitator, this is the voice and or the face that you will have with you for the next 13 weeks. And as your course coordinator, I am the person who will seek to address all your course-related matters for everyone that is registered in this course. Now, if you looked at the course outline, you would have seen two other names there. So that says, please check your microphone, guys. It says that okay, guys, I'm very sorry. I just had to mute everybody. So this is saying to you that I am going to be ably assisted by those two team members who will serve as facilitators as well. And we are going to have a team of tutors who will be working with us. We'll hear more about the tutors and the tutorials in a little bit. Now, some of us may be doing this discipline of accounting for the very first time, and you don't know what exactly to expect. But I want to assure you guys that the task is quite doable. You're hearing the voice of someone who was in a similar situation years ago, before some of you were even thought of. Because in fact, I have been with the university for almost 30 years, way more than half of my lifetime. So that would have been long before some of you were even thought of. And I was in a similar situation because I had never done accounts before when I went to the university. In fact, I tell you something, I did not go there to do accounting, and yet I ended up doing my first degree in accounting, graduating in the top 5%, my second degree in accounting, went up to do the professional accounting, CPA, and I never thought of it when I went in. So no need for you to worry if you have never done accounts before. And I tell you something, when I did it, I didn't have teachers. We had lecturers in the truest sense of lecturing. So you'll be getting, in fact, I always say, I'm going to be there holding your hands as we go through the course. So what more do you want? But guys, in order for you to succeed. Not only in accounting, but I'll say in your entire program of studies. You must have what I refer to as a growth mindset. What do I mean by that? You're going to say to yourself, look here now, I don't know now, but with effort on my part. Notice I did not say with aptitude, because look here, the fact that you're here at the UWI means that you have the requisite aptitude, not true? So what you need to bring into play now is the necessary attitude. So with that attitude, you're going to put in the effort. Because once you put in that effort, with effort and the necessary resources, you're going to come to know it. That's the growth mindset. Once I put in the effort and I have the resources that I need, at the end of the day, I will know it. All right? And I can guarantee you guys that you will not be short of resources. Having said that, let me hasten to say to you, it is okay to fail. When I said that at Monday's class, they laughed. But it's true. It is okay to fail. But guys, what happened? Failure lends itself to recovery. In the game of boxing, what happened? Defeat is only declared after a contender is what? Knocked down. But what? They refuse to get up on the count of 10 by the referee. Not true. So failing means you get knocked down. But what? We're not going to make the 10 catch us on the ground. We're going to jump up, brush ourselves off, and get back in the game. Now, the other thing I want to say to you, remember, I tell you, I've been here long before some of you were born, you know. So I am going to be your mother. I'm going to be your grandmother. And I take my role serious. So there are certainly the things I want to say to you. I want to encourage you guys to make integrity the bedrock, the foundation of all that you do. Guard your reputation, guys, as reputation lost cannot, let me say it again, cannot be regained. I know that most of you are millennials, but hear what? I am encouraging you to use social media appropriately. I was saying to the class on Monday, sometimes people send me notes on WhatsApp because I'm going to give you my digits for WhatsApp in a moment. That's my student number, or later in the course. And sometimes people send me notes, and when I look at their profile pic, oh my word. Oh my word. Especially some of my girls. Come on. And sometimes some of the things that person's right there below their pic. Oh no. We have to make sure, guys, that we build positive digital footprints in the sands of social media, because we don't want to put up anything that is going to come back to haunt us. Remember, I tell you how long I've been here? My past students, maybe I taught some of your parents. Who knows? They always saying to me, Miss Stone, make sure to talk to them because they are the ones who are out there interviewing you for jobs. And when you send in your application, because they know that you are millennials, you know that they're going to check out your social media stuff. So make sure nothing not out there that is going to come to haunt you. So guys, I say to you, look here now. My team and I are here for you. We are committed 100% to your academic growth and development, and we want to see you succeed. But hear what? You must fulfill your end of the bargain. I remember when I was in primary school in grade 5, and that is many, many moons ago. There were 2 signs in the classroom. The one that faced the students said, aim high. And the one that faced our teacher, who at the time was Miss Latti, God rest her soul, it said, do thy duty. So guys, I don't take my eyes off doing my duty. I always seek to do my duty. I don't get it right with everybody all the time, but with most persons. So all I'll say to you, aim high. All right, guys? Aim high. So I'm looking forward to a productive and interactive semester. So before we get into the meat of the matter, there are some housekeeping issues that I want us to deal with. So that when we sort these out, you will be able to successfully navigate your way through the course and make the learning experience a special one. So look on the screen. You have been looking at it from you came in. I say now to you, welcome to our classroom, where the magic never stops and the adventure never ends. All right? And every week, I will be starting off our session with a little thought. Because remember, I told you I am doing my duty. So you will not be short of motivation. And for today's session, I thought it necessary to kick off with a thought by our beloved Nelson Mandela. And he said, I learned that courage was not the absence of fear, but the triumph over it. He said, the brave man or woman is not he or she who does not feel afraid, but he or she who conquers that fear. All right? So we are going to put on a brave face. We are going to conquer that fear. All right, guys? So to our housekeeping matters, we all know that there are 5 streams. As it turns out, for the next 2 weeks, 2 of those streams are going to be in the online setting. We don't know exactly what will happen thereafter, but let's see where we'll go. So of the 5 streams, I'm doing 2 of those streams. I think online persons registering would have seen 3. I normally would have done 3, but this time around, remember, guys, I'm an old soldier. So I am doing 2 streams, and you are part of one of those 2 streams. All right? Now I know everybody thinking about assessment. So let's look at the course assessment. So we have 2 pieces of assessment. We have a course assessment, which is normally a midterm exam. It will cover the contents of week 1 through to week 5 or 6, depending on when we are doing it. And that piece of assessment is normally comprised of multiple choice questions and a constructed response question. And I'll talk a little bit about that later on in the session. And then this comes about normally during the 6th or 7th week of the semester. That is the week of October 9 or October 16, as the case may be. I think we'll more look at the week of October 16. Then there is a 5, that carries 35%. Now, there are tutorials. So to make sure that persons are engaged in their tutorials, and engagement, guys, doesn't mean that you're just going to go to your tutorial and sit down. You're going to be active participants. That carries 5%. And then there is the final assessment, which carries 60% of your overall score. And that one is also a mixture of MCQs and constructed response. And these 2 main pieces of assessment, guys, are going to be in the face-to-face mode. All right? So you may have your sessions online, but the assessment is going to be in the face-to-face mode. Now, your course material. You accessed the course from the course page that looks something like this. So each week, you'll go here, and guys, this is where we'll communicate with you. So make sure that you visit this page. I would try and go on daily to see what's going on. Is there any news? Is there any announcement? And I'll communicate with you through the news forum. All right? And you get all your course material there. Even those persons who are not going through online, like you don't have your lectures online, but this is where you will still go to get your course material. And the course content is laid out on a weekly basis. You would have seen that. The information for this week is already posted. So you have your summary notes. You have your worksheet ready to go. And later this week, after today, when all the lectures are finished, we'll put up the summary slides for you. But might I say to you from now, those summary slides will not include the workings for any problems. All right? So you have to make sure that you are in the session and you're doing what you're supposed to do. All right, guys? So that takes care of accessing your course material. Now, 2 little points I want to mention here. Respect is due. So, as course participants, you're expected to conduct yourselves in a manner befitting that of adults. Now, this one here. In the physical setting, students who are engaged in disorderly conduct are usually asked to leave the lecture theater or leave the room if it's online. Or alternately, the instructor has a right to go. Now, I am telling you from today, this instructor will not go. Not true. We're not going because I have the other 100 and odd students to think about. So I will not allow the misbehavior of one person to allow everybody else to suffer. So it therefore means that that person will have to go. Are we there? And then now, guys, your devices. I know that you millennials, you know, you love your phone and your devices. But make sure you put them in the silent mode during lectures. You know, I understand that sometimes you expect a little call and so on, but all you do, make sure it is in the silent mode, and you make sure your microphone on if you're online. If you're in the lecture theater, you make sure you sit at the door or near a door. So when that call comes in, you simply just step outside and take your call and then you return. No problem. We have no issue with that. All right. So I mentioned tutorials earlier on. So this is where we're at. We are at week 1. We are at week 1. Tutorials will not begin until the 3rd week. So that single hour that you have registered for, remember you have registered for 3 hours, the double session, which is the one today, and there's a single hour that you registered for. So this week and next week, you will have your double hour session on the Wednesday morning. But come the single one, no. Come next, the 3rd week now, September 19th. Starting that day, you're going to have your single hours. Now, why is that necessary, guys? You can well imagine. You're just coming in the course. You don't have anything that you prepare for yet. Not true. So that 1 hour session, and remember, you must only choose 1 hour. You would have covered some material this week, next week, so that you can actually tackle the questions that are there on the tutorial sheet, the worksheet. So we normally ask you to prepare your questions ahead of the tutorials. You have different tutors assigned for the tutorial. So what the tutors will do what they want to do, but most persons are going to assign questions to persons to prepare for the next week's tutorial. Now, guys, I know some people very shy. And remember, the tutorials are face-to-face. People are shy and they don't want to go on the board and they don't want to talk. But look here. Put away shyness. Remember, the 5% is there. You have to get engaged in the sessions. All right? And we will tell you, like for the first week tutorials, I'll tell you what questions to prepare. It doesn't mean that if your tutor assign you as a person to prepare a question for next week's session, for example, the rest of the class is just going to sit down and don't do anything and wait on you. No, everybody is going to do the workings. So that when you come now and you go up there to the board. We are there, the rest of us are there now to work along with you. All right, guys? And that is the only way that you are going to learn. And guys, practice, practice, practice. Remember I told you, you will not be short of resources. These worksheets that you're going to get are comprised mainly of past paper questions. So make sure that you are practicing. Now, a little word on the success rate in the course. And I am going back to pre-COVID. On average, our pass rate hovers in the 70% region. Failure rate, about 30%. Don't be worried though. In those days, we had over 1,000 students during the course, maybe 1,200, 1,300. I remember one semester we had up to 1,500 because the course is done across a number of programs. Now, those persons who are in the 70% are the ones who normally do what they ought to do. They attend their classes, they go to office hours, they prepare for the tutorials, and they practice. Look at this. Those who are coming in with some kind of fear and trepidation, look here, guys. Oftentimes, the first timers form a great percentage of this 70%. Most of them fall in that category. And you know why they fall in that category? They are the ones who are often organized and prepared. Those who fail, watch this now. When we had the big numbers, approximately 300, 400 students will be failing. And you know, included in that 30%, look here. They did accounting in high school, but what they did, they look at the course outline and they say, what? When I do these things in C-Sec and Cape, man. But as I said to the group on Monday, you may have very well done these things in C-Sec and Cape, you know. Yes. But I bet you that some of you who got ones and twos, you never get a balance sheet balance. Talk to me. You never get a balance sheet balance, yet you get 1 and you get 2. Why? The discipline is called what? Not principles of accounting. So it therefore means that we are marking for principles. Yes. Not the correct answer. If you should look at a set of solutions that we prepare for our assessment, we have half mark, we have quarter mark, we have 1 mark. Every line carries a mark or a fraction of a mark. So it is so hard to mark those papers. But that's what we do. And those persons skipping class not enough. They wait until a few days before the exam. They're rushing. They don't go to the tutorials. So you don't go to tutorials this time around, you're 5% gone. So that means you're batting for 95%. And you did not prepare by simulation of exam conditions. What we mean? You know that you have 2 hours to do the assessment. The big question, you should be able to do it. The constructed response question, you should be able to complete it under an hour. So to do that, you're going to have to practice. That is the simulation. Practice to complete the big question within that time frame. Remember, guys, resources will be there for you. We're not sending you out in the dark. But as I said to you, you have to do your part. All right, guys? So that is my 10 cents on housekeeping matters. So unless you have questions, I hope I was very clear. So unless there are questions, let us delve into the business of the day. Now, guys, I want us to understand that it's a mixed group. It is a mixed group. There are those of us who have never done the... Yes, my darling.
Before you move on, I want to ask a question. But I raised my hand, but I realized you didn't see. So can I ask a question?
Oh, yes, my darling. Go right ahead.
So on my schedule, I'm having some problems right now. I don't know if I will fix them, you know. Hopefully I'll fix them. But some of my classes, this class is clashing with another class for me, like in an hour. So would it be okay if I was to like alternate coming to some other lectures? Like I'd come to this, but sometimes I'd go to the lecture. There's a lecture at like 6 to 8. I never really want to be here so late, but I would
no
like
problem, my darling. No problem at all. Because what happens, you know, is that the content that I cover, remember I told you I'm the coordinator for the course, so we all cover the same material. All right?
Okay, miss, thank you.
Okay, my darling. Good. Who is the other person that has the hand raised? Go right ahead.
Good morning, miss.
Good morning, my darling.
Would we be able to have access to past papers?
Remember I told you that the worksheets are comprised mainly of past paper questions. What happened, you will find that some areas that were covered in previous deliveries, we may have left them out. So I don't want persons to get like a full past paper and there are questions on it that they can't do. So what I normally try to do is to select questions and give to you to work. But you won't be short of past paper questions for sure. And I'll also give you practice multiple choice questions. All right?
Okay, miss, thank you.
You're most welcome, my darling. All right, guys, so that's the old and you can pull it down. Okay, guys. Yes, somebody else has a question. Go right ahead.
Yeah, raise my hand. All right. Hi. So we were speaking just now about the tutorial and all that, and you were saying it won't start till the 3rd week, right?
Yes.
And you were saying some materials will be posted for the tutorial. Is it the case where it's going to be posted between now and in the 3rd week, or is it a case that it's going to be posted now so that we can go and read up on them somebody?
It's already, the worksheet for the 1st week tutorial is already on the course page.
Okay, I'm not.
It's already on the course page, my darling. Read, yes. And if you look at the worksheet, you're going to see that it has 3 sections. Some of them has 3 sections, some will have 2. You're going to have, you have lecture questions and you have tutorial questions. The lecture questions, we'll do them in lecture, or most of them in lecture. Those that we don't do, we will give you the suggested solutions. And the tutorial questions now, your tutor will cover those in tutorials. All right?
Okay, thank you.
You're most welcome, my darling. All right, guys. So as I was saying to you, we have persons who have never done the discipline before. And we have some persons who have done accounting up to Cape, or perhaps you may have one and two who have gone outside of Cape. So we have to pitch the course at a particular level. And I said to you that some of us may have gotten ones. We never got a balance sheet balance. Can anybody tell me why is it that you never got a balance sheet to balance? Why?
Never focus.
You never focus, but something more than that in accounts. What's the foundation of the accounts for those who did financial accounting? What is it that you must know?
Asset is equal to liabilities plus equity.
Yes, you have to know that, but there is something that is even more basic than that.
The debits and the
The
principals.
debits and the credits, my darling. The debits and the credits. So I am telling you, your balance sheet never balance because you not fully grasp debit and credit. With all due respect, that is where the problem is. So when you finish this course, you're going to master debit and credit. Because as my friend said, assets equal liabilities plus capital. Yes, well, to capital we call owner's equity, but we soon talk about that. So debit and credit, keep that equation in balance. Guys, when we finish with this, you're going to find out that the equation that you learn in high school is more powerful than you think it is. All right? So let's go, guys. So accounting and the business environment. What is accounting? For one, accounting is the language that we speak in business. It is also an information system. And in this information system, we measure, record, process, and communicate financial information about a business entity. Now let us see if we can visualize this system. Remember, guys, we're going to measure, we're going to process, we're going to communicate. Let's put it together. And this diagram puts it together very nicely. Now, in businesses, we speak to what we call business activities. In a typical system, we begin with business activities. And I'm going to say it from now, from today. In accounting, we refer to these business activities as business transactions. We call them business transactions. So when you see the term, all are you doing accounts for the first time? Transactions are those business activities. Now, the data generated from these business transactions are captured on documents such as receipts and invoices. Now, someone who has done accounts before, what is the name given to these documents? What we call them? The receipts, the invoices, what we call
First
them?
documents.
Source documents. Guys, those of us doing accounts for the first time, make sure that you are taking note of these terms. So the business activities, we call them transactions. The documents in which we capture the information or the data are referred to as source documents. Now, the next thing that we are going to do, we say we are going to process. We are going to process this information. So this processing area, this, guys, is the action center. Where we process things. That's where the action is taking place. So we are going to be involved in a lot of action. This is the action area for us. So this is where we prepare our financial statements. And these financial statements are normally they form part of this annual financial report. Now remember, we said that in this information system, at the end of the day, we are going to communicate this information to whom? Decision makers. And these decision makers, guys, we refer to them as the users of this information. So let's see. We have our business activities or our transactions. The data from these activities will be reflected on our source documents. We take those source documents now and we process that data to generate our financial statements. The financial statements are what we use to communicate the information to the end users, the decision makers. All right? So those doing accounts for the very first time, you get what is going on here? Make sure you get a visual image of what is going on. Remember, you stay with me. You can't go wrong, guys. So our source documents, our action center, our users. All right? So the next thing I want us to have a look at are the steps in the accounting process. So as far as the accounting process is concerned, we start off, guys, with, there are 6 steps. So we start off with analyzing those business events. We analyze the events that took place. Step 2, we are going to be recording those events. And by the way, guys, we are doing financial accounting, you know. So when we say we analyze the events, we're looking back at what took place. Historical data we're looking at. Then we're going to record. We're formalizing things, putting these things in the formal accounting system. Then the next thing we are going to do, we're going to do some sorting or classifying. Now, when we say we classify things, guys, we're grouping them. And if we're putting items in a group, there must be similarities. So we put similar events together. Those who have done accounts before, you must be looking at it and say, oh, is this statement things? So after that, we summarize. That is, we are going to be putting this data in an understandable format. So somebody talk about the accounting equation earlier on? Yes. Put it in a form that is understandable. And after we do that, we're not going to communicate, so we're going to report or tell the results. And that is usually, guys, by way of the statements, the financial statements. Now, remember that this information is going to be used by decision makers. So to use the information, there must be some kind of interpretation. We must decide on the meaning and importance of the information that is there in the various reports. And for those of us who have done accounts before, those reports would be what? Let me talk about them from now. What reports you normally do? What reports you normally do? Can somebody help me out there? I'm not seeing any hand, so.
Could you repeat, please?
I'm saying to you, what are the reports? I'm going to just call a name, you know. Tori. Balance sheet. Yes, indeed.
Income statement.
Income statement. You remember?
Cash flow.
That's
Cash
the
flow
income
statement.
statement. The cash flow statement. Beautiful, guys. Beautiful. So you remember something, man? So in interpreting those statements, guys, you remember you talk about something called ratios when you did accounts? Yes, when we do the ratios, the understanding comes out there. All right, Halstead, I see you have the answer there in the chat. So guys, I have to be manipulating, you know, because I'm going full screen so that I can see what's going on. So guys, over the next few weeks, we will be going through these 6 steps. And look here, every single individual who completes this course must be able to go through these 6 steps. So now, guys, I want us to have a look at the users of this information that we have generated. Who makes use of this accounting information. We have persons outside of the entity. We call them external users. And these persons, they make decisions about the entity. And there is a second group referred to as the internal users. And these persons make decisions for the entity. So notice, you know, guys, those outside of the business are making decisions about the entity. Those who are inside of the business, they make decisions for the entity. So let's step back to the external users. Can you think of any group of persons who would need this information to make decisions about the entity?
Investors.
Investors, beautiful.
Miss Creditors.
Creditors, beautiful. So creditors like banks and anybody else who lends to the business. What about government people? Any government person you can think of?
Use it to determine.
The tax authority, that's the main one. Yes. Labor unions. Not true.
Journalists.
So these are some of the persons, potential investors. We want to know what is going on before we invest. People who lend to the business. We want to know what is going on before we lend our money. The tax people want to know what is going on because they want
Miss, if you're speaking, we're not hearing you.
What about the internal users? Who are those
Managers.
inside?
Managers,
Yes.
the employees,
The owner.
Managers, our employees.
customers, employees,
Yes, indeed.
Shareholders.
HR people. What about them?
Shareholders.
Hmm? So our managers, our employees in different departments. Yes. HR people. They would want to know about what is going on. Now, to match these two groups of users, we have two fields of accounting. So two groups of users, two fields of accounting. So the first field, financial accounting. Financial accounting speaks to the external users. And on the other hand, we have management accounting. Some persons say cost and management accounting. And that speaks to the internal users. So the primary difference between the two fields is actually the main users or the principal users. Now we say, guys, in ACCT 1005, our focus is on the external users because we are doing financial accounting. For those of you who will be going on to ACCT 1003, at that time, our emphasis will be on the internal users. All right? So we said earlier on that accounting is the language of business. So let's try and focus on this business thing for a bit. So the first thing I want us to look at is the types of ownership structures. How do we describe the owner of the business? How do we describe the owner of the business? We could describe the owner as a sole proprietor. And so we speak to sole proprietorships. We could describe the owner as a partner. And so we speak to partnerships. And then the third structure is what we refer to as a corporation. And the owners of a corporation, we're going to go back to it in a bit. But these are persons, we say they buy shares or stocks in this business for. And so we call the owners stockholders or shareholders. All right? But we're going to get back to that. So let us quickly look, guys, at each of these three structures. And if you never do accounts before, I am going to suggest to you that you use context clues to help you. Sole proprietor. That's a one-man show, not true?
Wait.
Partnership, now must be more than one. Yeah, so who is signed there now? Come on, talk to me. Somebody doing accounts for the first time?
Yes.
Don't worry yourself, man. Oh, where you signed for? You know, see me taking my time and going through. You notice how I'm moving slowly? Because I want to make sure that you get the basic. You notice I haven't been crunching any figures. I am sure that those who have done accounts before must be saying, then how she start up talk plus a talk so, and it's figures. But what? It is more than figures here, so you need to go through the theory which underpins what you are doing. Don't worry yourself, man. Might I say to you, you are in good hands. Don't worry yourself. All right? So the sole proprietorship, we have a single owner that we call a proprietor. Usually, you don't take much capital to start up, not much money. So we talk about low startup costs. Now, it's your business. So there is no restriction. The only thing is that whatever you're doing must be legal. It must be above board. Now, listen to me good now. This one not take much to start up. But there are some disadvantages. The first one, the owner is personally liable for all the debts of the business personally. So in this case, we say that the proprietor has unlimited liability. Now, guys, from an accounting perspective, listen good. From an accounting perspective, there is a concept, and by the way, on the course page, there is a document that speaks to the accounting concepts. Please read it. From an accounting perspective, the owner and the business are deemed to be separate entities. Are we there? From an accounting perspective. So we talk about something called the entity concept. Simply put, what that is saying, I am operating a business as a sole proprietor. But look here now. I buy a telephone for my home. I cannot put the cost or the expense associated with that telephone in the books of the business. That is not a business activity. Are we there? From an accounting perspective, we are separate entities. So the only activities, the only transactions that should be reflected in those statements that we generate from the action center must be business related, and that is in sync with the entity concept. But guys, that's accounting perspective. From a legal standpoint, look good. From a legal standpoint, the owner and the business are one and the same. So remember that, guys. From an accounting perspective, they are separate entities. But from a legal standpoint, the owner and the business are one and the same. That is why the owner's liability is unlimited. So your debts can, as a sole proprietor, can extend to your personal belongings. You have to sell your house, you have to sell land. You have to mortgage your wife, your husband to pay off the debts. Are we there? Sole proprietor. Now, the other thing to note is that for the sole proprietorship, the life of that business is limited. So if the sole proprietor stop doing the business, that's the end of it. Sole proprietor dies, that's the end of that business. Sole proprietorships. Next, guys, we turn to look at partnerships. Now, as the name suggests, partnership can be one person, must be two or more, up to 20. Now, what happens in a partnership? It's a coming together of persons, not true? So we would be pooling resources, brain power, skills. 4 of us could decide to go in a partnership. I don't have any money. But the other three have money. But what? I am the brains. I have the personality, the skills. So we're pooling everything in this business. Now, the thing about a partnership though, is that each partner is seen as an agent of the business. Who is an agent? Not somebody who acts on behalf of the business. So it therefore means anything that one partner does is going to be binding on the other partners. The only way you can escape that is if you have in place a limited liability partnership. Other than that, each partner is an agent, so the liability of each partner is unlimited. And if you have a limited liability partnership, you must have a general partner. So 4 of us in the partnership, all 4 of us cannot be limited. 3 of us can be limited. The 4th one is unlimited. And that 4th person is a general partner. So look here now, guys. What you think must happen in a situation like that? If you are the general partner, what you're going to do? Remember, it's 4 of us in the partnership. You are the general partner. The rest of us, liability limited. We are limited partners. What you're going to make sure?
Make sure you have a bigger stake in the company because you bear more risk.
Yes, because you assume more risk, yes. And you also have to make sure that, look here now, you see any decision that must be made, what? The buck stops with whom? No, must you, the general partner? Of course. And you want to make sure that that is the case, you know, darlings. You see, to make sure that that is the case, put everything in black and white. Write up a partnership agreement. All of when are your best friend from primary school. Word of mouth, not cutting it. Put it in black and white, guys. Because when push come to shove and you end up a court, it's the partnership agreement that is going to speak. If there is no partnership agreement, oh dear, you are going to be treated based on what the law says. You know, have to bear the loss, whatever there, equally. Once there is no partnership agreement. Now, like the sole proprietorship, partnerships have limited lives. So 4 of us in the partnership, 1 partner pull out, that partnership is no more. If the remaining 3 of us want to continue, there has to be a new partnership agreement. That's what I mean by limited lives. If a partner dies, that's the end of that partnership. The rest of us want to go on, a new partnership agreement. So please note that for both sole proprietorships and partnerships, there is limited life. Bottom line, ownership cannot be transferred. So let's quickly turn to the third one, the big one, corporations. Now, corporations are legally and financially separate from the owners. Legally and financially separate. The ownership of corporations would be divided up into what we call stocks or shares, as I said earlier on. So it means that each owner is referred to as a stockholder or a shareholder. Now, in a corporation, there is limited liability of stockholders. That is to say, the only thing I can lose, if I'm a shareholder in a corporation, the only thing that I can lose is what I have invested should the company go under. Limited liability. The other thing is that ownership can be transferred. Remember, an owner is referred to as a shareholder. So if I buy shares in a corporation, I can go back to the market and sell them to somebody else. And that doesn't affect the corporation at all. Now, guys, you can well imagine. A corporation would have hundreds, maybe even thousands of shareholders. So everybody can run things? Not at all. So what the owners do? The owners elect a board of directors. Now, this board of directors, these are the persons who are going to be developing policies. They are the ones who declare dividends and appoint management. That management team that they have are the ones who are going to deal with the everyday operations of the business. So the management are the ones who are going to be executing policies and carrying out the day-to-day activities. So the board of directors, they put the policies in place. And although I have their declared dividends, they don't have to declare no dividend. As a shareholder in a corporation, you don't have to get dividends. You can benefit in another way. We can benefit from dividends, but supposing you bought some shares in the corporation for say $20 each. And then later on, the share price moves up to $25 each. You still benefit, you know. You see that $5 that goes on? We call that capital growth. So as a shareholder in a business, you can benefit in either of two ways. You can benefit from what we call capital growth. That is the appreciation of the share price. And we can benefit by way of dividends. And the dividends don't have to be cash. You could also get shares, but we are going to speak more about that as we advance through the course. Now, because the corporation is a legal persona and you have hundreds, thousands of persons involved here. You must understand that it's going to be big money to start up like a corporation, because you need a formal document for formation. And that document, we call it the Articles of Incorporation. And normally, it's a law firm that takes care of this. So you know you have to pay up some money to get this document in place. So guys, please note, because ownership can be transferred, it means that a corporation's life is unlimited. Ownership can be transferred from one person to another. Now, corporation has its disadvantages. Remember, guys, that the corporation is a legal person. So as any individual, the corporation has to pay taxes. Not true? Now, if I am a shareholder and I benefit by way of cash dividends, I am also required as the shareholder to pay taxes. Remember, guys, the dividend that I got is from the earnings of the corporation. And I have to pay taxes on it. The corporation also pays taxes from the same earnings. So one disadvantage is the possibility of double taxation. And then, guys, because you're dealing with so many persons, the government have to step in, because they are going to have to operate on behalf of those persons. So as a result of that, we have extensive governmental regulations. Remember, guys, we are doing financial accounting. Whatever is generated is going to be used by persons outside of the entity to help them make decisions. So government going to put in some rules and regulations in place to protect the interest of the shareholders or the investors. So in ACCT1005, we are going to be focusing on sole proprietorships and a lesser extent corporations. Now, based on what I've said, guys, please note all three ownership structures are deemed to be separate economic entities but from a legal perspective. So from an accounting, separate economic entities. So when we are doing up the books, we have to do them a particular way. But from a legal perspective, sole proprietorships and partnerships are not separate legal entities. So under the law, the debts of those businesses extend to the owners. But from the corporation's perspective, if you are a shareholder, don't worry yourself, because the corporation is seen as a legal person. It's a separate legal entity. All right, guys? So having looked at the ownership structures. Let us now turn to the types of businesses. So the question is, how do we describe the businesses? What are the types of businesses?
Sole trader.
Ah, you're
Card-
reading up, girlfriend. So we classify the businesses according to the type of service or product provided. But the sole trader, my darling, is the same as the sole proprietor. We're stepping out a little bit further from that now, looking at the types of businesses. How do we describe the business itself? So the first one, we call it a
Service.
service organization. Beautiful. Service organization. So if it is service, now something intangible that we're offering, and from its service, it is going to be labor intensive. Not true. So it means that wages and salaries would be the greatest percentage of your costs. Are we there? Wages and salaries. Can you tell me any entity that would fall into this category called service organization?
An accounting firm.
Accounting firm, beautiful. Law firms. In the medical field, hospitals, hairdressers, travel agencies, you name them. A service, something intangible. The next type of business is what we refer to as merchandising businesses. Now, who is a merchandiser? Who we call a merchandiser?
Somebody that sells sells products or stuff from another organization.
So they basically resell.
The person is going to be
Reselling.
buying and selling.
Buying and selling.
Ah, there we go.
Retailers.
Buying and selling. And look here now, more to it than just buying and selling. They buy finished product and they resell them at what we call a markup. Markup. So persons that buy and sell, typical examples, supermarkets, wholesales, department stores, jewelry stores, fall into this category, merchandisers. Now we say that they resell at a markup. And I want you to understand the difference between markup and margin. Now, markup is profit expressed as a percentage of cost. Margin, on the other hand, is profit expressed as a percentage of sales or selling price. Let me use a little example to demonstrate. Let us say that we have an item that costs $100. The profit on it is 25. What is the selling price of this item?
125.
125. That's the selling price, 125. Now, armed with this information, if I were to ask you, what is the markup on this item? Remember, the theory says markup is profit expressed as a percentage of cost. So the profit is $25. The cost is 100. So our markup, guys, would be equal to 25 over 100. Not true? As a percentage, that would be 25%. Are we there? But if I said to you, what is the margin on this product? It is the same profit, but this time it's going to be expressed as a percentage of that selling price. So it's 25 over 125, and that gives us 20%. Two different things. So what I'll say to you at this point, because later on in the course, we are going to be revisiting these two terms. When you see markup, you think cost. And when you see margin, you think sales. Are we there? Markup relates to cost. Margin relates to sales. My darling, I'm sure I heard somebody say miss.
Somebody was asking if the PowerPoint is gonna be in the Orville.
Remember I told you the summary slides. Yes, my darling, I'll post them for you. But remember I told you, any workings though, me not showing it in no slide. All right? But for this week, I will put up everything. All right? So make sure you understand the difference between markup and margin. All right? So we have looked at service. We have looked at merchandising. So now, guys, we turn to the manufacturing businesses. Now, what happens in a manufacturing concern? Talk to me. What happens in a manufacturing concern?
You say make the product to sell?
You make the product to sell. So what you start off with?
Raw material.
Beautiful. You're going to buy your raw material. And then you're going to use labor and machinery to convert that raw material into finished goods. So typical businesses that are deemed to be manufacturing concerns: garment industry, food and beverage, automobile, toy factories. So when you think of a manufacturing concern, guys, remember, you start with raw material and you're going to work on the raw material to make it finished goods. So it therefore means that at the end of the day, the manufacturer is going to have on his or her hand raw material. You're going to have some items that are finished, and you would have some items that are unfinished. Where are my accounting people? What you call the items that are unfinished again? What you call them?
Work in progress.
Work in process. So you would have learned when you did CAPE 2 that a manufacturer carries 3 inventories. raw material, work in process, and finished goods. And you use them when you're doing up your manufacturing concern, manufacturing accounts. So guys, in ACCT1005, our focus is going to be on service and merchandising entities. Let me stop here so no one says something to you. And in costing, you're going to look at the manufacturing. Listen this now. You remember when we talk about the assessments? I said to you, you have a midterm assessment and you have a final assessment. And I said to you, at the end of the day, for everybody who goes through 1005, you must be able to prepare a set of final accounts. And I did say to you, say, you have, for the midterm, you have a constructed response question or a structured question. And you also have a big one for the final. Me telling you from now. For the midterm, you'll be required to do the final accounts of a service entity. Write it down. And don't, when exam time, you come asking me, Miss, what is going to be on midterm? Me tell you from today, day one. So the big question on the midterm is going to be final accounts of a service entity. And for your final exam, we are going to do final accounts of a merchandising business. All right? Good.
Thanks, Miss.
Yes, man. Write it down. Now, remember we said, guys, that when we do accounting, we measure, we process, and we communicate the information to the external users for financial accounting, that is. And these persons are going to be making decisions about the entity. What decisions are they going to be making? Remember, we said potential investors. Should we invest in this business? Creditors. Should we lend to this business? So when we do financial accounting and we report at the end of the day, financial reporting, we are really providing information useful for making investing and financing or lending decisions. Now, since we are providing information, guys, to people outside of the business, this information must be able to stand up to scrutiny. So for it to be able to stand up to scrutiny, guys, it must be governed by rules. We call these rules GAP. GAP means generally accepted accounting principles. Generally accepted accounting principles. So these are the rules, standards, and procedures that we are going to follow in preparing You see them there? The financial statements. Because once we use these rules, guys, we are ensuring the integrity of this financial information that we are giving or providing these persons with. Now, who is going to speak to the integrity of these statements that we are providing to outsiders? Talk to me. Who is going to swear to the integrity? Which group of individuals?
Auditors.
The auditors. Beautiful, my darling. The auditors. Yes, indeed. Yes, Ken Thompson. I see you getting on there, man. Yes, indeed. So now, this gap includes some principles on 4 main things. The first one, recognition. What items must we recognize in the financial statements? What must go in there? Each of the statement that we do. Remember, we're measuring. So for the measurement, in financial accounting, guys, anything that we do must be quantified in dollars and cents. What amounts must we report? For each of the, look, follow this word, elements included in the financial statement. As accountants, we are onto this thing called presentation. What line items, subtotals, and totals must we show in the statements? How we must fix up things? What's the format of the statements? And then the principles also speak to disclosure. What specific information is most important to the external users? So remember, I say, for things to go in the financial statement, they must be quantified in dollars and cents. But supposing there are things that are pertinent to the decision-making process that we need to make the users aware of, we must disclose them. I'm telling you from today, where do we disclose these things? We have something that we call notes to the financial statements. Notes to the financial statements. All right? Now, these rules and principles that we're talking about here that govern the preparation and dissemination of financial information, how were they arrived at? To answer this, we have to look at the evolution of the accounting standards and guidelines. Now, it started off, guys, with the IASC, and that is the International Accounting Standards Committee. And this committee was formed in 1973. Now, prior to that, guys, everybody was doing their own thing. In Jamaica here, we had our standards that we were using, We call them JSAPs, Jamaica Statement of Standard Accounting Practices. Everybody else had their own. But remember that, guys, the world is now a global space. So you have businesses and branches of businesses in different places. So the need arose for us to have international standards. So the committee was formed. Now this committee developed worldwide accounting standards. And these standards were referred to as international accounting standards. We call them IASs. Now, in 2001, the committee was replaced by a board, still dealing with standards, but they call themselves the International Accounting Standards Board. Came into being in 2001. Now, what they did, they looked at the old IASs, amended some of them, replaced some of them with what they now called IFRSs. These are International Financial Reporting Standards. So instead of saying International Accounting Standards, remember, they keep some of them, because they amended them. But anything new now, they're not calling them IAS again. They call them International Financial Reporting. Because they, then get modern now and say, we're reporting, it's financial reporting. They also, guys, revised the objective of financial reporting. And they looked at what we call the qualitative characteristics of financial information. What should that information speak to? What should be the characteristics? Now, in Jamaica, we dropped our JSAPs on July 1, 2002, and went international by taking on the International Accounting Standards. All right? So let us now, guys, look at the blueprint of the International Accounting Standards Board, because that is what is going to take us in the true accounting now. Warming up for you guys. So the blueprint, it describes the basic concepts by which financial statements are prepared. And this framework has 3 prongs. The first one, it speaks to the objective of the financial statements. And we already know what the objective is because we talk about it since we come here this morning. Remember, we said the objective is to provide information to outsiders. Then it speaks to the qualitative characteristics of financial information. And then thirdly, it speaks to the basic elements of the financial statements. So we are going to look at these 3 prongs. Remember, we already know the first one. And by the time I wrap up on the 3rd one, those of us who have done accounts before will find that I am right in your arena. So the first one, the objective, I'm not even going to spend any time on it because we talk about it already. It is going to provide information that is useful for making, investing, and financing decisions. So potential investors, lenders, creditors, they are going to be using that information. Now, the qualitative characteristics of the financial information that we generate. These things, guys, they go without saying. The first one, whatever you prepare must be understandable. Anybody who has basic business sense, understand basic business economic events and accounting should be able to understand what the statements are saying. The information must be relevant. Remember, guys, people are using the information to make decisions. So it must be provided in a timely manner. The next thing, it must be reliable. People making decisions on it, based on it. So the auditor must be able to step in and verify that that information is correct because the outsiders are relying on it. So the information must be free from material error and bias. Material simply means, guys, anything that is going to impact the decision. Anything that if you omit it or if you misstate it, it's going to impact decision. We say it is material. The next thing, the information must be comparable. I must be able, having done up my statements for this year, I must be able to compare them with the statements for last year and prior years to see how I am performing. I should also be able to prepare my statements with what obtains in the industry. Comparability, another qualitative characteristic. And then finally, guys, the information must give a true and fair view of our financial position. In other words, the information must present fairly the financial performance. Talk to me, accounting people. What statement speaks to the performance of the entity?
The balance sheet.
That's the position.
Oh, the income statement.
The income statement talk to your performance. The balance sheet talk to your position. And CF, mean your statement of cash flows. So they must speak fairly, represent fairly our position. Our accounts must be able to stand up to scrutiny, guys. And the third thing, which is what we are going to wrap up on today, the accounting elements. Now, 3 basic elements exist for every business. 1, talk to me now, accountants. Assets, liabilities,
Owner's
and
equity.
owner's equity. The same thing you call capital. Now, the relationship between the 3 basic elements can be expressed in the form of an equation. And that equation we call the accounting equation. Warm it up now in the accounts. And this accounting equation came into being by one Pacioli, an Italian monk, churchman, you know. And he's deemed to be the father of accounting. Now, guys, every single business event impacts the accounting equation.
Excuse me, Miss.
Every single one. Yes, darling?
Miss, he's the same one that described the double entry system of
Beautiful. Yes, ma'am. Indeed. Father of accounting. Church people do it. So the accounting equation says my assets must be equal to my liabilities plus my owner's equity. And I often say to my students, look here now, you know, so the accounting equation could just say assets equal liabilities. Yes. Because assets, and notice there, guys, owner's equity is the same thing that you call capital, but it's for the proprietorship, we say capital. Assets are your economic resources. Liabilities are claims to the economic resources. Owner's equity. Do you remember I mentioned something called the entity concept? That says from an accounting perspective, the owner and the business are separate entities. So guys, a business is normally financed by owner money or borrowed money. Owner money is what we call owner's equity. Yes. And borrowed money is debt. So for those who are going to be doing financial management, when the lecturer asks you, what are the two sources of financing for a business? You must jump up and say debt and equity. So owner's equity is a special type of liability. Based on the entity concept, it is an amount that is owed to the owner by the business. So guys, when we meet next week, we are going to pull apart this accounting equation. This is just step one. Assets equal liabilities plus owner's equity. And to chop it off, can anybody tell me which statement would reflect the accounting equation as it is here so now?
The balance sheet.
A balance sheet, beautiful. We're ending on a high. So my darlings, we have reached the end of today's session. So oh Lord, I see a step over a little bit. So until next week, read up your summary notes, guys. I'll put up these summary slides for you, and we will pick up right here. So make sure you have your calculators and your writing material ready to go next week, because we're going to get into the crunches. Make sure you have a copy of your worksheet as well. So until then, guys, you have a fantastic weekend, rest of the week into weekend, and next week we'll pick up
Miss,
right here. So yes, my darling.
Miss, do we need a ledger?
No, baby, not at all. All
Miss?
right.
Good morning, Miss.
Yes, my dear. Good morning.
Will the recording be posted on the RVLE?
Yes, yes, indeed. Yes,
Okay,
indeed. All
Thank you.
right.